This week is an incredibly busy week and very, very important to market traders, both in the currency side, future side, commodity side, all of it. I'm going to try and unpack for you the best I can, as well as talk about some trades that I am in or looking at myself. Let's jump in. Welcome back to the channel, guys. If you're new here, my name is Nick. I share trade ideas and analysis and market coverage every single day here of the trading week. I want to jump in here first with the S&P 500. So I am actually, this is a trade I have long. I picked this up last week. Here is my current position, currently long as of, I held this trade over the weekend, but we have started out really strong here this week. And I wanted to talk a little bit about why that may be and how this may impact other markets like the dollar, the gold market, the currency world, etc. Again, we're floating about $260, $250 on this trade right now. And I wanted to comment a little bit on where I think things are going when it comes to the indices. So my take on this, first of all, for those of you who trade NAS 100, S&P, etc., there has been a lot of talk from bears that this earnings season, which we're in right now, is going to be a terrible, terrible time for the indices, right? That they were going to have a potential earnings recession, which, although it might occur at some point or another, it doesn't seem to be coming out the way that many bears had expected. In fact, today we see a really impressive break to the upside to start out the week, and in my opinion, this paints a bullish picture for risk on assets. Now, not only that, let's take a look at the dollar here today, which is underneath last week's lows. Very notable to pay attention to if you are a dollar currency trader, if you are, you're watching the bond market. This is big because, again, we were able to finally, after all of last week's back and forth trading, we were able to actually get underneath the previous lows at 101.7. These red candles came in very, very strong here to start out the week. And in my opinion, this paints a continuation picture for the dollar going into this week. Now, we have to be cautious because on Thursday, we have GDP numbers, and GDP numbers, advanced GDP, will tell us a little bit about how GDP growth has been quarter to quarter, and that will be a very, very insightful thing in terms of the economy, which will have impact on the dollar, as well as the gold market. Let's paint a picture here for gold going into the week. For those of you who are watching it, I wanted to comment on price action first, and then I want to show you where the smart money is at. What are they doing? What are they buying? What are they selling, etc. So from a technical perspective first, we have resistance pretty clearly defined up here at that 2010 mark. If you've been watching the channel, if you're a regular everyday viewer, then you know I've been very much watching that 2010 level for breakouts for longs. Didn't get it, never even tried to break above. Resistance held very, very strong for sellers all week last week. And not only that, during this time, we had a little something called PMI numbers, both from Europe and the UK, Europe and UK specifically, which caused this fall, and then this continued fall, which was from the US. So we had a lot of economic data that came out stronger than expected, driving the price of gold down. Why would that make sense? Well, remember, we talk about this often. Why do people buy gold in the first place? A lot of times it's because they're fearful of their money losing value, fearful of central banks losing their control of things. It's generally a fear-based asset in some ways. And so when fear is diminishing, meaning economic numbers are looking strong, it oftentimes will drive the price of gold down. Now, when watching the gold market here this week, though, with GDP numbers around the corner, volatility is expected. And in my opinion, watch for breakouts either direction. Because if we get stronger than expected GDP numbers, it is very possible that gold makes a break back down to 1950, which Frank and I talked about on our stream here this morning. This notable zone, 1975, is trying to hold. Now, for the bull case, the opposite would be the case where we get actually weaker than expected GDP numbers and recession fears spike yet again. If this happens, I am interested in getting long on gold, as mentioned earlier, on a break of this 2010 and retest of that area. So this is a trade setup that I'm watching. It's on my watch list going into this week. If we get some volatility that takes us above the highs, I'm looking for pullback opportunities for continuations to the upside. especially with a weaker dollar going into this week. I think it has potential to rebound in that area. Let's take a look at smart money, which is showing us what is the institutional trader average on particular assets. Well, when we just talked about gold, so let's talk about it in terms of the COT data. Well, COT data shows us 78.75% long. So there's still a long preference for gold at this time. Some other notable mentions, you also have oil here very high, platinum, you have the euro, which is interesting, right? You have the euro still probably the most bought proportionally wise currency. And then on the flip side, we have things like the Japanese yen, we have the Canadian dollar, we have SPX, which is a little concerning for my own trade. But please remember, when looking at the EdgeFinder, we're not basing all of our trades on a single thing. We take many components, as you see on the left-hand side, into consideration when taking trades. Anyways, this, though, is, I would say, a positive for gold if we can actually get breakouts. So when I look at the COT data, I'm not just buying outright just because I see it on here. I'm looking for technical setups as well. So for me, gold would be a buy if we're able to break 2010 and give us some sort of a retest. I'm looking for long continuations. And from there, where can it go? Well, I think we probably head back to 2050, but then the bigger picture would be 2070, the previous all-time high. So we'll watch for that. If we get signs of life on the gold market, I'll pay attention to that a little bit further. Quick look at Bitcoin. What's going on with Bitcoin these days? I do actually have a trade open on Bitcoin, not something I usually trade, but I'm scaling into some Bitcoin. I think that if we do get some, at some point, perhaps the back half of the year, some dovishness from the Federal Reserve, maybe we even get that in our upcoming Fed meetings, that sort of thing. Regardless, I think that in a weaker or a more dovish Federal Reserve, at any sign of that, I think Bitcoin has a lot of upside. That's just my take on it. I'm not a crypto Super Bowl by any means, but I think it's been beaten down tremendously, and that, with businesses opening up around crypto still and it becoming slowly more and more integrated, I think it's an interesting one and potentially worth the risk that it could pose. Of course, risk is involved with everything that we do here with trading, so it is a very small position size for me. Anyways, let's keep going. We'll take a look at some other assets here that are on the list. I mentioned JPY, so this is a big short interest from institutional traders. And by the way, guys, we are ending our sale on this. I don't want people to miss it, so let me remind you, if you have been thinking about getting the EdgeFinder, if you've been watching my channel for a while, if you're a supporter of our content or just a fan of my channel or A1 Trading, we have been putting together this tool officially for 1 year now, and this is our 1 year celebration discount price. We are doing 40% off. That is the biggest sale discount price that we've ever done. We're doing 40% off right now. And if you're interested in getting that sale price while it lasts, which it is ending soon, it is ending this week. If you guys want access to that, click the link at the top of the description. It's going to open up a chat conversation spot for you where you can ask one of my team members for that discount price. What you'll see on your screen is what it looks like. You just click that link. It's going to open up a chat box, chat icon, where you can have a conversation with us and ask about our discounts. Click that button, open up a conversation, and one of our staff members will get you the biggest discount price of the entire year if you've been thinking about getting our software. We've been working on it really hard. We're trying to get more people using it. And yeah, I think it is well worth the money. If you are interested, take advantage of the big sale.
This is your last chance.
Retail sentiment is also another one. You guys feel free to pause the video if you want to take a look at this. We're looking at retail positioning, which is showing us on the major currencies as well as gold and oil, where retail is trading. What you'll notice is that, some notable picks here. Look at this, dollar Swiss, retail traders 93% long. Now, why does this matter? Well, usually I find it to be a contrarian indicator, meaning if the retail crowd is super long on something, generally speaking, I like to be on the short side. And if retail traders are super short on something, for example, dollar CAD, I like to be on the other side of that, the long side of that, right? So I find this to be a contrarian indicator. When we take a look at our two extremes, we have dollar Swiss and dollar CAD. We also have euro dollar, pound dollar. These assets, retail traders are very much shorting. And then you flip it around, you got dollar Swiss, NZD, and Aussie dollar. These ones are very long biased by retail traders. So some notable distinctions there that could be useful. Again, get access to this and more with the sale while it lasts. Link is in the description. Thank you guys for watching today's video. Have a great rest of your day. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.